Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for February 5th, 2017. Let's take a quick look at how the markets finished off last week. Excuse me. We saw a big pop in equities on Friday. The Dow had its best day of the year so far, up 186 points. This was, excuse me, all after Donald Trump signed an executive order reducing financial regulations. And that really saw a move in the financials, which are really leading this next leg higher. And it looks like they have more room to move. We'll be covering more of those in the near future. But let's continue on. The S&P 500 here was up 16.5 points on Friday. The NASDAQ was up 30. And the Russell also had a big move, up 20 points. TLT, the 20-year Treasury ETF, swung around pretty good, but finished lower by just 5 cents on Friday, while gold finished higher by just 2 points. But it's a much bigger story here. I think gold is at that point where it's either going to explode or implode, and right now the way it feels is like it's about to explode higher. If we look at the daily here, we've got really strong momentum to the upside here, and had a pretty decent day on Friday. Now, if we look at the weekly chart, yeah, we have downward momentum, and it's just testing that 20-period moving average right now. But the one thing to keep an eye out for here is if we get a move above this moving average, and then we come back to retest that moving average, even though that moving average may be sloping lower, okay? If we retest it here and bounce, then I think gold can go much, much higher. This is a pattern you really want to keep an eye out for. It's something we'll be keeping a close eye on, and especially on a weekly time frame. If it were to trigger off a pattern like this, that means several weeks of upside. So that's something we'll be keeping a very close eye on with gold. Crude on Friday was up 29 cents at the close here. It's still within that range here. Now, coming up this week, key news reports to keep an eye out for. On Monday, we have U.S. consumer spending measure and labor market conditions. Tuesday, we have Red Book, JOLTS, and consumer credit. Wednesday, the MBA mortgage apps number. And then Thursday, jobless claims, wholesale trade, and money supply. And Friday, we have consumer sentiment and the Baker Hughes rig count. So a lot obviously is still going to have to do with our political situation going on right now. That's something that could really swing these markets. But what you want to keep an eye out for here is a break of these highs. I think we still go higher here, especially led by financials. Again, I'll cover more of those later this week. But if we break out to new highs here, I think obviously another leg higher is in store. So that's what we'll be keeping an eye out for. But that's about it for now. Enjoy the rest of your day, and we will see you on our next update.